between Orchard Robotics and Ambrook, where they raised $20+ million in a Series A. And both of these businesses kind of remind me of businesses, AgTech businesses we've heard about for several years. Coming up, Tim and I are going to break down the announcement from a few weeks ago that Orchard Robotics has raised $22 million. They announced it on LinkedIn, seemingly came out of nowhere. So Tim and I are going to just unpack it all today. Tim, before we get into the podcast, we haven't talked Niners, and the NFL season is upon us. It's worth noting we are recording this right after the Niners Week 1 victory over the Seahawks. I did not see a win coming here, Tim, and who knows what's going to happen in Week 2, but it was a heck of a way to start the season.
Off to a good start for sure. It was nice to see the defense backfiring on all cylinders. Good to have Robert Sela back as defensive coordinator. He was running the stairs before the game. Always gets me amped when he's like doing the pregame workouts, but the D was tearing it up. It was good to see them pull off a win. Bosa get a strip sack at the end. That was awesome.
It was so good. There was a lot of great moments. We won't mention the several special teams blunders because we pulled out the W.
Yeah, a little bit of a liability to kicker, so we'll see what happens. We might be onto a new one, and by the time this airs.
Seriously. All right, well, good to be back, Tim, to really chat about this Orchard Robotics announcement. But first, if you guys haven't checked out our sponsor for the quarter, we're nearing the end of the quarter, American Ag Credit. Huge thank you to them for sponsoring the podcast. If you guys haven't checked them out, please do. If you're interested in financial solutions and products for your farm, for your agribusiness, be sure to check them out at the link in the show notes. They also have an insight service called Terrain. They have insights across a wide range of crops and regions that you will get value from. So be sure to check them out. The link is in our show notes. All right, Tim, I don't know. I thought a fun place to start here would be to just play this video. This LinkedIn post from the founder of Orchard Robotics just kind of came out of nowhere. Charles Wu posted about it. He's the CEO and co-founder of Orchard Robotics. He announced their $22 million Series A. Should we just watch this video, Tim?
Yeah, it was like one of the first time I've seen a hype video for a fundraising round. So let's play it. Let's see what's going on here.
We just raised $22 million here at Orchard Robotics to power the future of farming. My name is Charlie, and I'm the founder and CEO of Orchard. Our mission is to secure America's food supply by building the AI farmer that automates our nation's farms. It all starts with the OS for crop management that we've built that consists of a couple of components. The first is our AI-powered, industry-leading camera system that mounts on the top of any tractor, ATV, or farm vehicle. These are vehicles that farmers drive down their rows, through their fields, every single day. And our cameras take pictures of millions of trees, vines, and plants, and the billions of fruit that grow on them as they drive past. We run state-of-the-art machine learning models on all of these images to tell farmers everything they want to know about every single plant. This is information like knowing the number of fruit on a tree, the size and growth rate of the fruit, accurate yield estimates, mapping and early detection of diseases, the color, grade, plant health, tree canopy size, inventories, and a whole lot more. The reason why this information is so valuable is because currently, fruit farmers in the US are losing anywhere from 30 to 50% of their potential crop value due to imprecise farm management alone. This comes from things like when they spray or prune or thin every single tree with the same amount of chemicals or pesticides or fertilizers. When in reality, half the trees might only need half the amount. The issue is that if you're managing millions of trees on thousands of acres, it's really difficult to know exactly what every single tree needs. The good news is that we've built industry-leading software on top of our data called FruitScope that lets any farmer log in, look at their data, make an informed decision, and command and control their operations in the field directly from our software. Our systems are now deployed across some of the largest specialty crop farms in the nation and all across the world, mainly working in apples, grapes, blueberries, and cherries. And recently, we've also gone into citrus, strawberries, almonds, and pistachios. We're excited to tell you more about our technology. So if you're interested in learning more, please feel free to reach out. And if you're interested in helping us build the future of farming, making our farmers more profitable and sustainable again, we're hiring across all functions right now. And again, a big thank you to all of our farmers. None of this would have been possible without you, and everything that we do is for you.
All right, Tim. Reaction thoughts. I'm gonna let you kick us off here.
Yeah, pretty interesting. Just like the hype video, the layering on of the text onto the video, I thought was pretty interesting. Yeah, it doesn't seem like something super new and novel. Like we've been talking about, kind of this kind of technology has been around. I feel like for 10 years on kind of estimating yields on crops. So it's like kind of interesting. They're like positioning it as this like totally state of the art AI farmer, and it just seems kind of like something that's been around for a while. Like I subscribed to some random AI newsletter, and I got an email, and this was like the headline of the newsletter was AI farmer, and it basically said like the key takeaway of this fundraise is farming's moat has just shifted from soil to software, and orchards planting the flag first. And I was just kind of like eye roll, like what? This makes absolutely no sense. So I was a little bit skeptical of the fundraise and just kind of the technology here.
Yeah, I mean, one instant reaction, and we'd love to have Charlie on the podcast. So if anyone has a direct line to Charlie, we'd love to chat through the business more. It seemed like, yeah, this was both the video and the business seemed out of 2015. It seemed like with AI slapped on top of it, right? This is basically like data insights powered by machine vision and stacking on AI on top of it. And it's really interesting. I think these are now two big fundraisers, Tim, between Orchard Robotics and Ambrook, where they raised $20+ million in a Series A. And both of these businesses kind of remind me of businesses, AgTech businesses we've heard about for several years. And my hunch, Tim, looking at the cap table of both these companies, is that these are non-AgTech investors that are coming into this and seeing an opportunity in agriculture. And I hope both of them work. I hope both of these companies are really successful. But the common theme between both of those, massive rounds, which means that the total market size, the valuations are quite large at Series A stage, and a lot of non-ag tech investors on the cap table. And I found that really interesting.
Yeah, I feel like probably the classical ag tech investors are probably a little bit more leery, probably a little bit more on the sidelines right now. So tapping into kind of a new investor pool that is more intrigued by this. And yeah, I think the AI buzzword of like we're doing something, but now we're layering in AI is getting people somewhat interested. I mean, Ty, it looks like a GoPro that you just strap on anything. It doesn't seem like super crazy expensive to pull together. I'm sure like the software component where you're doing the data collection and scraping like takes some lift. But like I saw Chris Lodondo from LNA comment on the company's page when they announced this, because like he has a comparable product that is much cheaper price. He's selling direct to farmers. So yeah, pretty interesting to see how they're going to price this and what the business model looks like.
That's what it comes down to me. Fundamentally, I think this opportunity it's been like, I feel like we've been talking about it for 10 years. It's still an opportunity, but I think it comes down to just the technical advancements is one thing, and then how you price it, right? Like, is there a market for growers to pay for something like this? Tim, when I first looked at this, I mean, I see a lot of comparisons. It's a little different, but a lot of comparisons to mineral, right? The part of Alphabet Google, the moonshot company that recently closed its doors and sold off its assets to Driscoll's. But a similar idea of basically pulling in images, video from the field so that you can have a map of the field and understand what's going on in every inch of the field. And yeah, fundamentally, that would be a great that's a need, right? Like, I think the fundamental underlying thesis, if you understand what's happening at every individual plant, that you can be more prescriptive with your applications and your care and management of that crop, like 100%, that's going. But what the key questions, right? Once you have this information, what do you do with it? And do you even have the equipment and technology to deploy precision applications, right? So it seems like Orchard is only doing the data collection piece and then the analysis piece. And maybe it's, saying, hey, you need to spray here, spray less here than over here. But then how do you actually execute that? And it's unclear if they're going to tackle that problem or going to rely on the other players in the industry. So I see a lot of I think, challenges with this model, especially at raising at such a high, presumably such a high valuation, of how you're actually going to make this all pencil and make all this come together. Because I think at the end of the day, this vision of the AI farmer is going to take so much technical risk here that I see.
Totally. On this update, they say farming stops being a guessing game. Agribusiness giants that once sold intuition and chemicals now face a rival selling precision and software. Labor unions, seed and pesticide makers, and even food distributors will feel the squeeze when farmers start running their land like quantified SaaS dashboards. Ty, it just seems like tons of hype. They're pitching the solution like it's going to save farming for everyone. Like the missing thing has been able to get like proper yield estimates, and I think some of the like there's some improvement to be made here, but you're not going to like solve all these different areas of like bringing down labor unions and pesticide makers. Like these claims are just kind of like a little bit out of this world.
I think this is why there's been a challenge in AgTech VC, is because I think AgTech venture capitalist firms were sold kind of these big visions. And the past 10 years have proven that there is a lot of challenges and complexity to accomplishing something like this at that big of a vision, right? And yeah, I mean, I think I see similarly. I think there's a lot of challenges here of how you scale this, how you scale to other crops. And to me, the biggest thing is, what are you pricing this to the grower? And how are you actually implementing some of these prescriptions, right, that they get? And I mean, Mineral had way more money poured at this problem, a ton of resources poured at this problem. They approached it from having their own hardware rover, right, that's kind of doing the data collection. I do like this like retrofit concept. I think like we've seen that with autonomous tractor driving, this idea of like retrofitting versus, ground up vehicle. I think there's pros and cons to each approach. So I mean, I like that. I think that it's a cheap way, especially in crops where you're doing the row running, Tim, of why not strap on a camera and collect that data. So maybe that's it's not that much more expensive to do the data collection piece. Maybe that's kind of what I'm missing here. Because if they can collect the data at marginal cost and then leverage all this insights and analysis from it, maybe that's kind of the missing piece.
Yeah, perhaps. Yeah, it's like, what do they do once they have that data? Can farmers actually react and respond to it? Because they're claiming you're going to save all this labor and inputs, and like variable rate spraying has been around for forever. It's like not a new technology, and like not every farm is set up to actually do and execute variable rate sprays. So like you can provide all these insights in the world, but if you operationally can't achieve them, then it's kind of a moot point. I'm looking at their careers page on the website and seeing they have some open roles in Latin America, like specifically Chile. Like that's always a red flag to me when you're like Series A, like still trying to find product market fit when you're trying to go global. Like I see that as like a big challenge and misstep that ag tech companies make of trying to go global too quickly. Like I like companies that kind of dial it in a certain geography, certain crop type versus like on the video, Charlie saying we're on these 4 crop types and we're on these next 4. And they're basically trying to be all things to all people. I think that's pretty challenging to kind of scale 8+ crops, multiple geographies, see that as a big challenge.
I think that there's a structural issue in ag tech venture capital, or just let me say venture capital that invests in ag, because I think a lot of the founders that get the money are painting this huge, huge vision. And that's what venture capitalists need and want. They are looking for the unicorn, they are looking for the 1 in 100 company. And so they need to be sold, whether that sale is based in reality or not. They need to be sold this big vision of we can do it all. And there's almost this function of it, Tim, where when you're early stage and you have this big vision, like VC is comfortable with some technical and execution risk. But I think this is like a ton of the ad tech investors that have been around for more than a few years, like understand, I think are more sophisticated when it comes to these deals these days. But I think this is what's problematic is founders can't get the money, the dollars, unless they're painting this big $1 billion business. But so they do it at a stage where, yeah, there's really untapped technical and execution risk, but they get the dollars because there's this big vision and you can't poke holes at things that you haven't done yet, right? So I think that's a challenge. And the companies that are actually just executing in a small scale, in a small geography, I think they could be doing good, but not having the best unit economics or the but venture capital growth numbers. Like, let me give you two examples, Tim. I think about like Lumo Ag, who is doing smart irrigation. We love the guys at Lumo and what they're doing, and they're focused on a very specific market, a very specific problem, building their own technology. Um, like are they going to have a tough time raising the next round because they're so focused and narrow of, hey, we need to go replicate this? Maybe the profit margins are there. It's a hard farm economy. So how are they going to do? Right. But they're in a much different position of maybe they have a lot more product market fit. And then I think about like Greenfield Robotics, right, who've been operating in the Midwest and doing their little infield robot. And similarly, like not expanding too fast. They've raised some money, but it's not this big, splashy, crazy, valuation Series A. But it will be interesting to watch if they're going to be able to get the financing they need to get to scale, right? And I think that's why Mark Brooks we've had on the podcast. I feel like that we need some middle ground, some ag investors that are doing, I don't know if we call it growth equity or what it is, but they don't necessarily need to see $1 billion exit. They could see a $50 million exit or $100 million exit, right? And I think this is like just the tough dynamic that we're facing in ag tech investing right now. End rant.
No, super good points, Ty. Yeah, I agree with you. Like, there was almost this like overpromise, underdeliver like dynamic where like no VC cares unless you have this massive outsized return for them. It's all power law, and so you're having to kind of make the TAM as big as possible. And like, we'll be global, we'll be in all these different crop types, and that might not be realistic in the time frame that you're saying. But like, there's no other way to get the dollars than to kind of over index on like what your value prop is, when like maybe you just need half that amount of money and you could grow slower and more profit and be profitable quicker.
Yeah, it's interesting, and maybe like it comes down to some of these like Charlie. I didn't know who Charlie was. He's a Cornell computer science dropout. He started Orchard in 2022, and he's a Thiel fellow, a Peter Thiel fellow. So I think like good, maybe very strong pedigree that is attractive to kind of non-ag specific venture capital, right? This Cornell computer science guy and Peter Thiel fellow, like this is awesome pedigree, and he's going to go now transform agriculture. So I mean, I'd love to see it. I would love to get Charlie on the podcast and hear the traction they're getting, hear how he's thinking about solving some of these problems, hear how he's thinking about how do they manage the execution of some of these insights that they deliver if they really truly want to be the AI farmer. How do they actually execute that? Would be awesome to talk about. But Tim, I guess my point is, I'm curious, like the founders that are getting the money, it's just kind of interesting to see their background. And it almost feels like in ag tech, we're seeing investors grasp for straws right now. And maybe it's like, hey, the past vintage, like maybe this vintage, we're just going to go all in on just founders that are kind of have a certain pedigree.
Yeah, it's like going with the outsiders of like they don't come from ag, but they have an interesting non-ag background. They'll go transform this new industry.
Totally.
Ty, what does one need to do to be a Thiel fellow?
Seriously, Tim, I've been waiting for you to apply.
What is it? What is it? What is it? I don't even know what it is.
Let's look it up. I think I've heard about this where he will basically pay up and comers founders to drop out. Yeah.
Oh, gotcha.
All right. It's the Thiel Fellowship, originally named 20 Under 20, is a fellowship created by billionaire Peter Thiel through the Thiel Foundation in 2010. The fellowship is intended for students aged 22 or younger and offers them a total of $200,000 over 2 years, as well as guidance and other resources to drop out of school and pursue other work, which could involve scientific research, creating a startup, or working on social movement. Yeah, so it's basically like he finds interesting people through the application process, presumably, and says, hey, don't go to college. I'm going to fund your next 2 years for you to just like do something interesting, which is a really cool idea. Tim, I think you're a little older than 22, so I think I think we missed the boat. We totally missed the boat on this. We shouldn't have been starting a podcast. We should have been applying for the Thiel Fellowship. Dang it. Well, I hope you guys enjoyed this. We're really curious your thoughts. What did you think of this announcement? I mean, I think it probably is, if you're in ad tech, you probably saw this announcement. It got 2,300 likes and 200 comments on it. So I'm curious what you guys thought. Reach out to us on LinkedIn, respond to a comment. We'd love to hear what you think. But appreciate you guys listening, and let us know what you think about this kind of reaction video, digging into this company and the raise. Appreciate you guys
I missed this by
listening.
like 16 years.
Go Niners. We're back at it. Hopefully we won week 2 and are 2-0 right now, but I'm probably wrong.